Hello, amazing traders, and welcome to my YouTube channel once again. My name is Sean Forex, and today I will be doing basic market structure on GBP, JPY, Euro, USD, GBP, USD. Without wasting much of our time, let's quickly go into today's analysis. First of all, it has been a while that I've released content almost a month ago, and sometimes when you are producing a lot of content, you need a break because our life as a trader is beyond being a trader. But without further ado, this is what has been happening in market so far. I was able to cut this market here because, like I usually say, trading is hard. Running analysis and being a chartist is one of the cheapest thing. But the hardest part in trading is the ability to be profitable. And I was able to catch this market at early stage. And when I mean early stage, I was able to do this counter trend line. So I caught this market around here and I was able to exit my profit around here. Though I was expecting market to move up, my plan was to catch as much as 600 pips because the initial market started here. I was able to enter the market. I slept off. I suppose I was planning to enter here at 186,543, but I missed the market. So I was able to enter here around 187. And at the end of everything, I was able to make, yes, 200 pips. But my plan was that to catch as much as 470 pips, but I could not because after this key level, market could not break the structure, which is the neckline. And right now, market has been consolidating so far. And because of public holiday, market is on holiday right now, but hopefully in the next few hours, market will resume back. Now, like I usually say, to be a profitable trader, you don't need to trade many pairs. The most important thing is you just need to spend a lot of time in front of chart so that when your mind need as a new trader, what you are doing is when you spend a lot of time in front of chart, either demo trading or just checking chart, you are developing a muscle memory. Your brain is trying as much as possible. You are creating a lot of repetition. And during that massive repetition, that is when you begin to see the patterns. Because pattern is all about what market is all about. When you have patterns, when you are able to examine the patterns in the market, it gives you access to see what market is doing per time. And right now, I was able to cut the market from here to here because this was Monday opening, this was Friday, and this was Sunday night. I was able to cut this market and I was expecting this market entry around here, but like I said, I slept early, so I missed this market, but I was able to enter around here. But I was expecting this market. I wanted to come to this place here. But this clusters of candle, this rejection candle, is not the main reason why I entered this trade around here. No, 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 no. I had to plot out my key level, which is Fibonacci. Now, this was on Sunday. Market closed on Friday around 186,852. But on Sunday night, when market opened, then there was a massive jump. Then from there, market pulled back to 0.618. It even broke the 0.618 and immediately reversed back. This level you are seeing here is what I call co-integration. It means that I do not just enter this market because of this counter trend line of a thing. I enter this market from Fibonacci, which is co-integration number one, which is perfect entry number one. Then channel breakout number two, retest number three, candlestick candlestick rejection, which is one of the most important things as a trader because candlestick is the price chart representation of what is happening in the market, who is in the market, either the buyers and the sellers. So I was able to enter this market and market came to this key level before everything begins to go shit. So I had to take my profit around here because I knew that if I do not, and before I knew it, market actually reversed and currently we are here. So that is all about what has been happening in GBP, JPY so far since last week. And right now, market is here. So I'll be expecting another entry again this coming week. Let me plot out my Fibonacci key level one more time. So there are two choices now. Is either market, I'll be expecting, I would love if this market can reverse to this key level. Yes. If market can reverse to this key level, it will be it will be something amazing. So if market can reverse to this key level, then which is another support here, I'll be expecting market to, because you can see that this is massive sideways movement. Market do nothing just throughout Friday, from Thursday around evening on Thursday till the entire Friday. It was a chaos market. So any trader that took this trade now, except you are trading in 5 minute time frame or 1 minute, is a chaos. This is massive chaos in the market space. So this is plan B. Plan A is, so the first entry setup I'm expecting is this market to come to this key level. If market come to this key level, that'll be a perfect entry setup. But if market refuse to come here, then I'll be expecting this market to come to this resistance level. If market can come to this key resistance level, then now do what? If market can come to this key resistance level, I'll be expecting this market to come back to this key level as a form of support. Because since this is a sideways market. So if market can break this trend line, come to this support level and retest, that is value number one. Or this Fibonacci key level, market come to this key level and do what? So if market can come to this key level, that's number one, or this key level. Those are the two criteria I'll be expecting market to fulfill before entry on Monday. And I'm expecting to take profit here. Though I would have loved to take my profit here, but we all know that when it comes to analysis, market can decide, because I just love taking my profit here, but I would love to take the second. So what I would do is once market reaches key level, I can take 80% of my profit. Then the remaining 20% enter break even and come and wait for the market to reach here. Then now expecting market to reach this key level and market to reach this key level and reverse back. That would be a total disaster, because imagine market giving you 280 pips and before you know it, you miss the entire movement. No, 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 no. That is not the right setup. So there are two choices I'm expecting. It's either I'm expecting this market to break out to Fibonacci 100% key level. Once market reach 100%, trace back to 0 point to this resistance, which is the counter trend line, then I find an entry strategy and go in. Or, but market will show us whatever it wants to do on Monday. And that is how I was able to do an amazing stuff on my account. And this is the result. Let me show you. Now, this is what trading is all about. Now, this is trading. You can see now, this is what I'm trying to do. So this is my profile on my FX book. And this was the trade that I took, that analysis I mentioned earlier. Now, this is it. So you do not need to trade a lot. You do not need to overdo yourself. Just be consistent, slow and steady. Don't rush things. And I will do this morning, and I'm waiting for market to come up next week, so that I will be keep updating you guys. So that is all I have on. So this is all I have for GBP, JPY right now. And let's see what market has been doing on GBP USD. Now, this GBP USD have not, it has been a while now. Was the analysis I run is sometimes ago, because you cannot trade every market. And you can see this is January, this is March, and we are in April now. So all-time high frame is an holy grail. See, See what this market is doing. It means that if I enter this market since January now, this is how many pips? This is 904 pips. This is amazing. Just from the power of raw price action leading. Our market is still coming here. Yes, for this market to reverse, at least this market will come here. So if you move to weekly time frame, now you can see that the buyers are now seriously in space. So with this basic of channel, you can easily see that, okay, this market has potential that between Monday morning, by Monday, by the end of Monday when market opens / Tuesday, market will reach this key level and there will be a form of rejection. Is either market come to this key level or market break this resistance level to come to this key level first before, come and test this counter trend line that is about to break. And that is the power of raw price action leading. No indicator, nothing. You just have to be patient, keep calm, and plug with proper risk management. Proper risk management. Euro USD, what is happening in Euro USD too? This was my analysis also on Euro USD. This is February, and since February, you can see that the market is playing out accordingly. So to be like you just need to spend a lot of screen time. You can see that the strategy works. So you don't need an holy grail to be a profitable trader. You just need to be consistent. You need to be consistent. You need to be stable. You need to know what you are doing. They cannot be hopping from strategy to strategy and thinking you'll be profitable. You cannot. So that is what is happening in Euro USD right now. And which one again? And UH13. This is UH30 and 4-hour time frame. I've not been trading this market for now. I've not been trading this market. It has been a long time. So that is all I have for you guys on this week market analysis. Till I come your way again next time, be safe. And if you have not subscribed, please click the subscribe button and see you next time.